The Italian economy has usually confused foreign observers over the past 15 years, and in the early 1970s, supply shocks caused huge domestic and external imbalances, which made Italy a lost cause in the view of many. But output recovery was stronger, and the turnaround in profitability happened earlier than in other healthier countries. So what will this mean for Europe's economy? To find out, keep on watching this video. It's not a secret that inflation rates have been high, especially in the Eurozone, and are expected to be higher than 9% by December 2022. Inflation brings problems of its own, but it does not lead to a large number of unemployment and loan defaults in the short run. If anything, it helps out some debtors. Inflation eased up to around 12.3% from a year earlier in December from 12.6% in November. The data released recently by the Istat National Statistics Institute showed electricity and food were among the biggest price increases. Also, the reading raises hopes that months of energy-driven inflation are starting to retreat, which is something which could allow the European Central Bank to increase interest rates less aggressively, and with the region likely in a recession. Recently, figures released show moderating price growth in Germany, France, and Spain. Recently, inflation data for the Eurozone are also expected to show a deceleration into single digits. The ECB policymakers have already hiked rates by 250 basis objectives since July. The rising borrowing costs are an issue for indebted countries like Italy. Inflation, too, looks to be an ongoing issue ever since the central bank lifted its projections for consumer price increases for the next 3 years. Although Italy's inflation rate has dropped 1.5%, compared to the 11.6% rate in December, it is still the only country in the EU with an inflation rate in the double digits, according to Istat. The drop occurred only because the energy prices have decreased. However, core inflation, excluding energy and fresh food, continues to rise from 5.8% to 6%. Also, according to the Harmonized Index of Consumer Prices, which Eurostat uses to compare countries, Italy has gone from 12.3% to 10.9%. Although this drop is quite significant, the inflation rate remains steep when compared to other European nations, such as Spain, which has an inflation rate of 5.8%, or France, which has one of 7% and rising. The staggering inflation rate has caused a parallel trend of real income decreasing, which has led more than a third of families to dip into their savings. Italy has seen the highest inflation rate in 39 years, with the last peak being in September 1984. A survey by Altrock and Sumo pointed out that due to inflation, 42% of the sample interviewed has experienced difficulty paying their bills, while 20% buy fewer food products. But now habits related to food are changing, with 20% of the sample buying less food, 31% consume less meat and fish, 16% decrease their consumption of fruit and vegetables, and 37% draw on accumulated savings to address everyday needs. Also, there has been an increased number of people needing help setting aside savings at the end of the month, with 41% of people struggling to save money. What are your thoughts on this? Let us know in the comments section down below. If you enjoyed today's video and found it interesting, then make sure to leave us a thumbs up, and do not forget to subscribe to our channel and click on the bell icon to be always updated with the most exciting content as soon as it's uploaded. Thanks for watching. See you again soon in another video.